Welcome back. It's time for business, and for that I'm joined by Owen Fairclough.
Good morning, Claire.
Owen. Now, we're going to start with a look at the markets. Yesterday there was a big sell-off here in Europe. How are the markets opening today?
Well, not bad given the news flow coming out of the Eurozone, Claire. We had Cyprus being the fifth country now to go to Brussels and say, can we have a bailout, please? They're not quite sure whether it's going to be a banking bailout or a government bailout. Maybe it'll be a bit of both. It probably will be a little bit of both in the final analysis. Let's look at those numbers on the boards of the European markets. As I say, looking a little bit brighter than they were this time yesterday. Remember, the IBEX closed in Spain around 3.5% down yesterday. You can see opening up a little bit in the red, but not quite as bad as things stood yesterday. On the Asian markets, the Hang Seng did manage to find just a tiny bit of ground before the close of the day's play. You can see there the only spot of green across the board in the Asian markets, and the Hang Seng, the Nikkei, I should say, around 0.8% down at the close of play.
Now, over the last 24 hours, we've seen a very sharp sell-off in Spain, and that was even before the latest bank downgrade. Yeah,
the timing was a bit cruel with all of this, Claire, with the Spanish government formally putting in that bid for a bailout of its banks with Brussels. We'll probably get the figures on that later this week at the EU summit. But just hours after that, as you say, Moody's announced it's downgraded 28 Spanish banks. That's pretty much all of them. All of the big household names are in there, the likes of Bankia, Banco Santander. 10 of these Spanish banks are now considered junk in terms of investment prospects. It's no big surprise. We were expecting this downgrade over the past few months or so. Remember, banks cannot be graded higher than governments, and the Spanish government has been downgraded once or twice in the past 12 months.
All right, now, Spain's banking crisis has accelerated calls for a European banking union. The idea is to give banks unanimous protection against financial shocks. It'll be pushed heavily at this week's EU summit, with France one of the most vocal advocates. That's because it stands to lose more than any other leading Eurozone country should its banks go under.
The champion of the European Banking Union, French President François Hollande. The new kid on the EU bloc wants closer ties for Europe's banks. At this week's EU summit, he'll push for a central supervisory authority, joint deposit guarantees and a wind-down fund for struggling banks. But why such enthusiasm? Because French banks have a high exposure to bad debt across the Eurozone, and the president is looking for a way to protect them. France's financial houses have more than 40 billion euros tied up in Greece. They don't hold as much government debt as they once did, but many still have subsidiaries. Société Générale owns the loss-making Geniki Bank, and Crédit Agricole took over Greek high street bank Emporiki 6 years ago. Since then, it's lost nearly 6 billion euros. France's third biggest bank does have enough spare cash to guard itself against these losses, but it has seen a massive slump in its share price and is reported to be looking for ways to palm off its Greek dud in the long term. Despite downgrades, so far investors have shown faith in the French economy and their banks. But with nothing like the reserve firepower of Germany, President Hollande wants banking safeguards in place so that France's future isn't only relying on the trust of the markets.
Just staying with France, Claire, this is, of course, the first week that François Hollande, the new president here in France, gets down to the business of government for real. On the cards today is a minimum wage rise. Now, this was one of Hollande's key promises, a real crowd pleaser during the election campaign. The thinking is that Hollande is going to raise the minimum wage here in France by around 2%. To give you an idea, put that in context, currently the minimum wage in France is around about 1,400 euros a month. It's not the highest, not the lowest in Europe. Many of Hollande's ministers have been fairly tight-lipped. There's a bigger budget as well in the pipeline. They've been fairly tight-lipped about what's on the cards, but we're expecting to see the French government announce savings of around 10 billion euros for the next year or so, maybe even a freeze on public spending because it has to get its budget deficit down to around 3% of GDP by 2017. That's to meet European Union requirements.
And the question for a country with so much debt is how this is going to harm, or will it harm, competitiveness?
Well, it's a good question because this was something that really came into focus during the election campaign, particularly with Germany and the former President Sarkozy making lots of comparisons, saying that France's economy should be a little bit more like Germany. Well, labour costs in France are around 10% higher than they are in Germany, and yet the government wants to put the minimum wage up even more. Germany, though, interestingly, has just had a wage rise of around 5%, and yet that's a country that's traditionally kept its wages down? It's a difficult question to answer in its entirety because there's so much going on in France. It has to save money a little bit, has to bring that budget deficit down. So many people are asking, can this country really afford to be giving public sector workers a wage rise at this time?
Okay, let's now pick up on some of the day's company headlines. Microsoft has bought out another social networking service. The software giant has paid $1.2 billion for Yammer, a kind of Twitter for workers to network with each other. It follows the $8.5 billion acquisition of Skype last year. Since its launch in 2008, Yammer has signed up 5 million users at 200,000 firms worldwide.
Beer maker Anheuser-Busch InBev has confirmed it's in takeover talks with Mexico's Grupo Modelo. Analysts say the deal by AN InBev, behind such brands as Stella Artois, for the firm behind the Corona brand is worth around $15 billion. It would give AN InBev, which already has a 50% stake in Grupo Modelo, better access to a fast-growing Mexican market.
And before we go, Owen, a familiar but fresh face on Facebook's board. Yeah,
Facebook has appointed Sheryl Sandberg. She's the Chief Operating Officer of Facebook to the top table. As you say, Claire, she is a familiar face. She was right by Mark Zuckerberg's side during Facebook's flotation last month. And she was very much the public face of the company along with Mark Zuckerberg. And many say schooled Mark Zuckerberg in softening his public image a little bit, making him perhaps a little bit more presentable to those bankers, although it didn't stop him wearing a hoodie, I think, to some of those meetings with Wall Street banks. He's diversifying the board. He's soothing many investors who want to see more women on the board at Facebook. Won't do an awful lot for control of the company, though. You have to remember, Mark Zuckerberg is firmly in control of Facebook. He's constructed that company so that he remains in control of the board. He remains the ultimate shareholder for this company. So how much sway she will have at a board level will, of course, remain to be seen. But I don't think she'll be leading a boardroom revolt anytime soon, anyway.
All right, thank you very much, Owen. That's it for business, and that's it from me for now. Stay tuned to France 24 Studio Novo. We'll have the latest headlines in just a few minutes. Don't go away.
Live from our studio, a debate on the subject of the day with experts, newsmakers and observers. Political or economical affairs, questioning society. Join us for analysis and in-depth talk. The Debate, Monday to Thursday, 7 p.m. Paris time on France 24.